Asian markets gained as bets firmed for a peak in interest rates among major central banks globally and as bond yields continued to decline. Meanwhile, oil sank to a nearly 5-month low, while gold held steady after dropping back from an all-time high. And automotive components and batteries group Mete, they've announced that their CEO has resigned due to health reasons. His resignation is effective at the end of January. Meanwhile, shares of mining group Teresa slumped almost 8% after it warned shareholders that headline earnings could fall almost a third in its year to end September. To give us more perspective on the markets, we are joined by Chantel Marks, who's from F&B Wealth and Investment. Chantel, thank you so much for your time. I mean, you look at some of the stuff that we're seeing as it relates to news coming out that Moody's has issued a downgrade warning to China. Yet at the same time, we're having to sort of look ahead to 2024 in terms of what we can expect in rate cuts. From that perspective, what's driving markets right now?
Well, I think it's definitely the rate cut narrative and the increasingly consensus view that the worst is behind us. I think that is probably a little bit complacent, but really what this market improvement that we've been seeing over the last few weeks is being driven by is the case for a soft landing in the US, that you aren't going to see a recession, that rate cuts are going to come because inflation comes down effectively because of interest rates already being quite high, and that the economy is going to do fine, even though interest rates are exceptionally high.
On those Fed rate cut bets, I mean, do you see anything problematic in what the market is pricing in and what the Fed is saying could happen?
So the Fed has definitely become more dovish, as has the ECB. It still is an overwhelmingly hawkish stance, though. So what has changed? The Fed and ECB has been saying that they will do more in order to combat inflation. Inflation is basically enemy number one, and that they won't hesitate to cut rates. More recently, what we've been seeing is officials from both of those major central banks saying that, well, we've done a lot. Inflation is starting to come down. We're not looking at cutting yet, but we probably won't have to hike rates again. That said, they are still kind of pushing that higher for longer narrative. And they are saying that it's still data dependent, right? So if they start seeing inflation moving out of control again and financial conditions loosening a little bit too much, then hikes could still be on the cards. I don't think that's the base case for anyone right now, but I think that softening in stance is really at play at the moment.
If you had to look back at the past 12 months of this year, given everything that's happened, do you believe that going into 2024, things could be any different?
I think the first 6 months of next year is going to be more of the same, but things should improve from the second half of next year. I think in the second half of next year, we will have a much clearer picture around how inflation develops and what is going to happen with interest rates. Perhaps even we'll be at the start of an interest rate cutting cycle. But in the first 6 months of next year, there's still a lot of uncertainty. We are still not sure whether or not that soft landing has indeed taken place, or if we are still in for a hard landing, meaning recessionary conditions in the US and probably in Europe. If that is the case, you will probably see weakness in markets, a lot of volatility, at least until we start seeing the first rate cuts.
With that said, as we talk about the past 12 months, has there been any winners for you so far?
It's been so interesting. I had a look at the equity market winners and losers year to date for the JSE specifically. And there were some interesting names that stood out there. I mean, the gold miners we know performed exceptionally well in 2023, and there are several reasons for that. And more recently, that rally has really become embedded. But some other names that stood out, Sanlam did exceptionally well in 2023, as well as Truworths, perhaps catching up a little bit with the rest of the discretionary retailers and benefiting from an uptick in the credit cycle. And then good old PPC that has really been one of the underperformers over the last decade or so, coming back strongly this year, likely on the back of them deciding to kind of focus and streamline their business in South Africa.
All right, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks, who is from F&B Wealth and Investment. And of course, we did talk about the gold price, which we are seeing at least 1% higher, maintaining that $2,022 a fine ounce. Brent crude 1% lower, and it's on the back of that worsening demand outlook that we're seeing out of China, but as well as the doubts over the OPEC plus cuts. But we'll be keeping an eye on that between now and the end of the year. We're going to be taking a quick break, and when we come back, we'll have more news for you, so stay tuned.